Wow, what a week it's been, folks. I'm your favorite news reporter, here to give you the scoop on all the latest happenings in the world of cryptocurrency, blockchain, and more. So grab a cup of your favorite coffee, get comfy, and let's dive into the daily news recap. Texas judge supports Logan Paul's bid to escape crypto's lawsuit. We've got some good news for Logan Paul fans out there. A U.S. judge has ruled in favor of his attempt to dismiss a lawsuit related to the collapse of Cryptos, a failed cryptocurrency project. However, the judge also allowed a class group involved in the lawsuit to update their claims. This decision gives Logan Paul some relief from the lawsuit, but the class group will still have the opportunity to proceed with their case. More info can be found at Cointelegraph. Moving right along, we've got some exciting news out of Illinois. Illinois governor has signed a new bill into law providing the first consumer protections for cryptocurrency users in the Midwest. Key points of the bill include exchange oversight to ensure consumer safety and security, and a cap on cryptocurrency ATM fees at 18% to prevent excessive charges. This legislation aims to protect Illinois residents from potential risks associated with cryptocurrency investments and transactions. You can read more about it at Cointelegraph. Now let's take a look at Bitcoin's current situation. Bitcoin investors may be hesitant to push the cryptocurrency's price to all-time highs due to the majority being in profit. According to Sentiment, a significant portion of investors are in the green, which could lead to profit taking and potentially hinder Bitcoin's ability to reach new record highs. Investors are likely to take profits, which could impact Bitcoin's price trajectory and put it in a mild danger zone. More info can be found at Cointelegraph. But don't worry, Bitcoin fans. There's still hope for a recovery. A recent sell-off in Bitcoin caught traders off guard, leading to a significant increase in long liquidations. However, data suggests that bulls are buying the dip, which could hint at a potential recovery. Key points include liquidity zones being swept, but an uptick in open interest, and bulls stepping in to buy the dip. This data suggests that Bitcoin may be poised for a recovery, despite the recent sell-off. You can read more about it at Cointelegraph. Now I know some of you are eager to learn about the latest developments in the SEC ETF decisions. Well, buckle up, folks. The U.S. Securities and Exchange Commission SEC has postponed decisions on several cryptocurrency exchange-traded funds, ETFs, including a proposed ETF by Donald Trump's media company to track Bitcoin and Ethereum. Other ETFs for XRP and Dogecoin are also being delayed. This means no immediate approval or rejection of these funds, leaving investors in a holding pattern. The SEC's decision will have significant implications for the cryptocurrency market. More info can be found at Decrypt. And if you're a fan of stablecoins and treasuries, you'll be interested to know that Bitcoin treasury firm Kindlem has successfully closed a $200 million raise to increase its holdings of the cryptocurrency. This move comes as part of a growing trend of companies looking to build their Bitcoin reserves. The funds raised will be used to purchase more Bitcoin, expanding Kindlem's existing holdings. This strategic move aims to capitalize on the potential growth of the cryptocurrency market. You can read more about it at Decrypt. Now let's talk about a crucial aspect of the crypto space: traditional banking services. Crypto Needs Banks highlights the importance of these services, citing the need for companies to access corporate banking accounts, secure money storage, and quick liquidity. Using traditional payment service providers or banks enables crypto companies to operate efficiently and effectively, just like any other business. More info can be found at Medium. Unfortunately, the crypto space is not immune to risks and threats. In April, a significant increase in crypto losses was reported, totaling $161 million. Despite common threats such as private key exploits and flash loan attacks, four alarming trends emerged, including the rise of supply chain attacks, record-breaking private key exploits, flash loan attacks on the rise, and smart contract exploits remaining a concern. These trends highlight the need for increased security measures in the Web3 space to protect against these types of attacks. More info can be found at Medium. Time for some blockchain news. A recent report by Mandiant reveals that North Korean hackers, known as EPT43, are using stolen cryptocurrency to fund their operations. They are targeting crypto services, laundering their stolen crypto through cloud services, turning their ill-gotten dirty crypto into brand new, shiny coins. This scheme is a perfect example of money laundering, and it's a worrying trend in the world of cryptocurrency. More info can be found at Medium. Now let's talk about Oracle manipulation attacks. Oracle exploit highlights the growing concern of these attacks, which resulted in losses of $219.6 million in 2022. Oracle manipulation attacks can have severe consequences, as seen in 2022's losses. The decline in total value, blocked TVL, for Oracle providers like Chainlink, suggests a loss of trust in these critical infrastructure components. Addressing Oracle manipulation attacks and ensuring the security of these critical infrastructure components will be essential to preventing similar losses in the future. More info can be found at Medium. Speaking of growth and innovation, let's talk about Cosmos-powered tokenization. Digital asset treasury companies DATCOs are changing the corporate capital strategy by allowing institutions to hold cryptocurrencies like Bitcoin as core reserves. This new paradigm is driven by Cosmos-powered chains, which enable real-world asset tokenization and institutional DeFi integration. Key points include DATCOs, Cosmos-powered chains, and examples of institutional DeFi integration. This development brings Bitcoin and other cryptocurrencies to global markets, providing a new paradigm for corporate capital strategy. More info can be found at Medium. Now I know some of you are fans of Bitcoin and its potential. Well, you'll be pleased to know that Babylon Labs is transforming the Bitcoin network with Babylon Genesis, a Layer 1 blockchain built on the Cosmos SDK. This breakthrough enables native DeFi capabilities, including staking and restaking, on the Bitcoin network. Key features include a modular framework for seamless interoperability and smart contract integration, and developer-friendly environment for DeFi primitives and cross-chain workflows. This innovative solution brings native DeFi capabilities to the Bitcoin network, empowering developers and users with a more integrated and efficient experience. More info can be found at Medium. And finally, let's talk about emerging trends and technologies. A presentation detailing 6 paths to $200 trillion has been making waves, suggesting that the potential value of emerging technologies like blockchain and the Internet of Things IoT could reach $200 trillion. Moore's Law on steroids, crypto IPOs, digital treasuries, the long I, March and more are discussed in this article. More info can be found at Substack. Blockchain bites. Why did the crypto whale go to the doctor? Because it had a whale of a time trying to withdraw its coins from cold storage. In all seriousness, have you heard about the new cryptocurrency that's predicted to be the next big thing? According to some analysts, it's not even a cryptocurrency at all, but a flavor of ice cream. That's right, folks, the future of finance might just be a scoop of Bitcoin-based Ben, ampersand Jerry's. That's all for today, folks. Thanks for tuning into the Daily News Recap. I hope you found it informative and entertaining. If you're new here, welcome to the Kryptonite community. If you're a seasoned pro, thanks for sticking around. Stay safe in the decentralized finance ecosystem and blockchain world, and we'll see you in the next update.